Thank the member for Griffith. The question is the bill be now read a second time, and I call the member for Chifley.
Let's be clear about one thing. The people of this country should be furious about what this bill represents, because what this bill represents is repayment of an IOU to the biggest financial interest in this country. The biggest financial interest in this country that did not want to be accountable for the way they provided advice to mum and dad investors, and the Liberal Party that was trawling around creating fundraising dollars for itself, making the nod and the wink to big business, saying that you give us the money and we'll make sure that we do the right thing on Fofa, and trample along the way in the rush towards those dollars would absolutely trample upon the interests, on the well-being, on the welfare of some people that would be their constituency, some people that would actually be their supporters. Small business, for example, small business owners that invest their money and want to make sure that after all their hard work that they would be able to have a retirement that would be able to leave them comfortable. And what happens? The Liberal Party goes ahead and decides that it will put in place a series of reforms, or they would deform the type of reforms we'd put on the table, and would weaken the type of financial advice that's put forward to people, and that would see those small businesses potentially lose out in terms of the financial advice or the return that they would get, and they would see people line their pockets at the big end of town at the expense of smaller people. It is absolutely scandalous. And what is happening here, and what is absolutely happening here, is that these reforms that are being dressed up as improvements to the Act do nothing of the sort. Nothing of the sort. As the member for Griffith rightly pointed out, they were put forward a few days before Christmas because the government didn't want to have any scrutiny of what they were doing. They then expected people, as was pointed out by the member for Griffith, to respond over January, and then, if they weren't going to get it through, they'd try and just ram it through as regulations instead of legislation and have it accountable. Why? Because they didn't want to have on full public display the fact that there was this grubby operation that was designed to refund or repay the huge fundraising effort that you saw, no doubt, the Minister for Finance and Arthur Sinodinos as the Assistant Treasurer had no doubt been attending. And we know they were going to a lot of fundraisers. And I'd be interested to know what type of commitments were given then in terms of what would happen on financial advice. But it's a truism of the modern Liberal Party that what they do is that they soak in the dollars from the big end of town, they harvest the votes of small business, and they sit on the loot and don't do anything to repay the trust that was given unless you're a big business, unless you're a big interest, and they don't care who gets burnt along the way. And if you've got, Deputy Speaker, if you've got a person in the form of Alan Jones, who is no friend of Labor, expressing his view publicly on his program that he has serious doubts about what's being put forward by the Liberal Party in terms of the moves to deform the future of financial advice reforms, then you've got to be worried. You have seriously got to question what is being put on the table and whether or not it represents a fair deal for people, because it certainly does not. And we have here people that are worried about, on the other side of the chamber, are worried about that once every 2 years, you'd be required to get an update, to re-sign a contract. They say that this is onerous, that once every 730 days that you might go back to your financial advisor and be required to look at how you're travelling and whether or not you re-sign. And they say that this is heinous. They say this is outrageous. They weigh up whether or not a person has lost their life savings as a result of poor financial advice. They look at that instance, and then they look at whether or not someone has to go back once every 2 years to their financial advisor, and they think, no, the paperwork's worse. It's worse filling out more paperwork. It doesn't matter if that person who is expecting in their senior years to be able to rely upon a decent level of income and savings, that they have nothing, that they are left destitute, that they are left going back living either with relatives or friends and have been denied the dignity of being able to enjoy their later years and be able to reflect on what they've done. No, the worst thing is the paperwork. That's what they concentrate on. People are doing this all the time. I mean, people out in the broader community are re-signing contracts every 2 years all the time. You go and get a mobile phone, you're re-signing a contract every 2 years. The general public hasn't had a problem. It hasn't stopped the progress of this great nation having to re-sign a contract. But these people opposite seem to think that it'll threaten the absolute financial foundations of the country if we make people actually go back to their financial advisor and just make sure that everything's on track and re-sign their arrangements. It is simply absurd that that is what they're putting forward, and they are saying that this is going to create a bulk of weight, a bulk of red tape weight on the nation. I tell you what, I would rather stick up for, and I know every person on this side of the chamber would rather stick up for the fact that someone can live in dignity and have the income they rightly deserve in retirement than be worried about whether or not they have to go back every couple of years to see their financial advisor or to test the type of advice that's being put forward. And in its place, we have here the Liberal Party basically running to the bell that's being rung by big banks who did not want to have to justify why they thought it was okay that a bank teller, and I don't dispute for 1 minute the knowledge of most bank tellers and who are trying to do the right thing, but you would want to have someone specialised who would be able to give you the proper advice that could account for that advice, for the breadth of and the complexity of those financial products as well, be able to answer questions and give you advice in the best interest of the consumer. What is wrong with that? What is wrong with asking that someone who's giving you advice is doing it in your interests and not in terms of their interests or in terms of their employer's interest? And yet this simple proposition seems to be the most devastating of all to those opposite. They think this is crushing. I, again, restate the point that on this side of the chamber we would rather have those protections in place looking after people. They are not onerous. I would rather have those in place than what we have at the moment, which is simply a grubby payback for for donations that were made for the sake of getting them elected, and in terms of they benefit in terms of their election, but the people who depend on a decent financial and retirement income are denied that very proposition. And if you look at what we had put forward, the type of reforms we had put forward, the best interest duty, which I reflected on a few moments earlier, the opt-in mechanism requiring advisors to get their clients to opt in to receive ongoing service every 2 years, the annual disclosure, the conflicted remuneration provisions that we put forward, all of these as a result of seeing one after the other of these terrible situations where people lost millions of dollars. And in particular, obviously, our reforms arose out of the terrible circumstances of Storm Financial. Now, I have also sat with some people, for example, that have been affected by the Timberland, the collapse of Timberland, the type of rorts that occurred there. Those poor people that have lost and who said to me they would never believe that they would, after having a relatively prosperous life, at the tail end of it, then feeling like they were going to live like paupers. And again, these people are being told that we don't want to protect you from that type of circumstance. We don't want to protect you from that type of circumstance. That's what the coalition is telling these people. They could not care less as to whether or not they were put in this terrible position where they lost their life savings. And I do not want to look someone in the eye and say, I couldn't have gone the extra mile for you to protect you, and in particular protect your financial security in later life, simply because those opposite had collected a great fundraising kick prior to the last election and had made this commitment that they would water down these reforms. And when you look at the way, I already reflected upon the fact that they were trying to usher in these reforms just before Christmas, trying during the January break to get people's reactions to them, trying instead of legislation going by regulation, and then you look at the contortions that they went through to avoid scrutiny, leading into before we rose at the last session, in the winter session, and you see the way that they've gone, and you can clearly tell that they are trying to do everything they can to avoid scrutiny and to justifiably confront the anger that exists in a lot of people over what's being done here and the type of things that are being put forward. You look at the type of reaction that's being put forward. Choice, for instance, who represent consumers, saying when the windback of consumer protections is explained, it is clear it will hurt consumers. This is Choice. Choice's nationally representative research found 81% of consumers were concerned that bank tellers would be able to sell complex financial products like superannuation without assessing customers' personal needs, and that they would earn a commission for doing so, and that is from Choice. You look at, for example, the comments of Mark Rantle, who's the Chief Executive Officer of Financial Planning Association of Australia, who says the FPA strongly opposes any possible reintroduction of commissions for financial product advice on superannuation or investment products. There are several risks which are associated with commissions for general advice, and they've outlined at great length their concerns at what was being put forward by the coalition. You look at Mr Richard Webb, the policy and regulatory analyst for the Australian Institute of Superannuation Trustees, who said mums and dads can expect advice from advisors and they can expect sales from salespeople. Investors have an understanding of the difference between those two terms. We note that the Cooper Review wrestled with this and concluded that commissions should be banned on all insurance products in super, including group risk and personal insurance, and that is what they had indicated there. Josephine Root, from the National Policy, who's the National Policy Manager for the Council of Ageing Australia, who says, "We believe the cumulative effect of these changes is to seriously weaken the reforms, giving less consumer protections and ultimately undermining confidence in the financial advice sector. We are concerned that people will opt out of getting financial advice and therefore will not get the maximum benefits that they could in the long term. It could be a cost on the taxpayer and government because they will move to not having sufficient funds in retirement." I mean, this was the whole process of devising the whole national pool of savings that were represented in superannuation, and in terms of what you see with the growth of self-funded retirees and the work that they're doing there, that there would be a pool of savings that could deal with this demographic wave that we are all confronted with, regardless of your politics, of an ageing nation, and that we simply cannot afford to have all of those people go on a pension, and that they would be better served by having a strong retirement income, providing an adequate return, making sure that they had decent super, as the Shadow Minister rightly points out, and that would be there, and that the cost would not be transferred to the taxpayer. Now, what happens in the instance where we do see, where we talked about Storm Financial, Timberland, West Point, a number of those others that had fallen over, and where people lose considerable millions of dollars? All we will see is a shift from having private funds, private savings, and those people, when they lose them, where do they go? Naturally, they will turn to the government, expecting that they should be able to, and they'll have to. They have to. They have no income, they have no other way of supporting themselves, and the government foots the bill. So, as a result of the Liberal Party getting its great little fundraising stash, weakening these financial laws, the taxpayer is forced to foot the bill ultimately as a result of these reforms, and it is simply disgraceful, and it is why I keep going back to the point that people in the general populace, the general public, are rightly upset about this. The more they realise what this means and the fact that this is not in their best interest, the angrier they will get, and they should be even more angry when they realise what the longer-term ramifications of this, not just on the individual but on the taxpayer as well, given what is being put forward here and what we're expected to rubber stamp in this parliament. And we also have an inability of, I mentioned the fact that they tried to ram this through at a time where the general public would not be expected to engage fully in consultation, but we also, along the way, lose an assistant treasurer. And the responsibilities for this go to the finance minister who tells us that there's a budget emergency, the treasurer who tells us there isn't one, and the assistant treasurer's spot that's left vacant, and we don't have a person who has actually got their full attention to one of the most significant reforms that face people into their later lives. And it's still they're MIA. At what point will they actually appoint an assistant treasurer to fill the spot that's been vacated by the departure of Senator Arthur Sinodinos, and to be able to have them usher through and be cognisant of all the complex facets of this debate, and instead of leaving it in a finance minister who's juggling two roles, have someone, well, three actually, three. You know, when you think about it, exactly, he's doing the work of the shadow treasurer, the actual treasurer, plus his own role, plus an assistant treasurer's role. He's
very busy.
He is. He's very busy. He's the super treasurer.
He'll be leaving the Senate soon.
He should. He should be. I mean, given that the Attorney General has this terrible case of reverse Midas, where everything he touches turns to dust, no wonder they'd want him as the... I was being very polite.
Time. Thank the member for Chifley. The question is the bill